Assalamu alaikum everyone, welcome back to another video. I hope you're having a great day. In today's video we will be looking at the portfolio. We're going to look at my entire portfolio. I'm going to show you any buys, any sales, and now there's a lot of new members to the community, so I'm going to explain to you the aim of this portfolio. I'm going to show you any buys, any sales, any dividends that have been paid, the plan going forward. So just give you everything you need to know. Again, I'm trying to be transparent enough to kind of show you what I'm doing. I'm not a financial advisor. All I'm doing is is just sharing my journey with everybody else. So if you like that kind of thing and you enjoy the videos that I put out so far, just give it a like this video, and it really genuinely helps. I don't ask anything else. Just if you give it a like, if you're new to the channel, subscribe. That's all I ask, because it really does help the overall channel, inshallah. Going forward, we just want to help as many people as we possibly can. And that out of the way, let's start. So the aim of this portfolio for me is to be able to create some sort of a passive income. Okay, I'm trying to hold 20 to 40 different individual stocks. I expect the companies that I own have to be provide a large, reliable and growing dividends. That's my aim. I do own some non-dividend paying companies. Again, that's the growth side of it. Okay, but mainly I'm trying to sort of create a passive income. Okay, if I can get a return of, say, for example, every single year about 8 to 10%, which is the market average, then that would be perfect. The dividend target is about 3 to 4%. If I can get 3%, that's perfect. 3.5%, the overall portfolio I'm talking about, that's also perfect. Now that's just generally it, but at the same time, I like the technology companies. And there's a lot of tech companies that I do like that are sort of growth-oriented companies. And for that reason, I also like to have a bit of growth in the portfolio, because I'm only 35. I don't want to buy just the old dividend stocks and just leave them there. Although they provide reliable basically dividends, and they are blue chip companies, they've been around for a long time. You expect every year whatever you expected, that's what you get basically from this business. There's no ambiguity and stuff. That is one of the reasons I love this type of business. But at the same time, I like to have some sort of a growth companies in my portfolio. So that's why I have companies like Adobe, Salesforce, Teslas and all that stuff. Okay, so yeah, that's just it. If you're new to the channel, I hope that basically explains what I'm trying to do. So let's start with, first of all, buys and sales, and then we'll take it from there. So for this month, I have made quite a bit of buys and sales. As you can imagine, can you see here? I spent £4,252. I'm based in the UK, so for that reason, I'm using pounds. And that added about £100 in dividends. Okay, so one of the things that I actually did at this year was, and I've shared this a long time ago, is I've sold out of TSM, Taiwan Semiconductor. Okay, and the reason I sold this out is because of what's going on in Russia right now, in Ukraine, and what basically Russia is doing in Ukraine. I hope people are okay and safe, and it's not a nice thing to watch. Innocent people getting killed is really horrible to watch the news these days, and I hope people are all right. But the issue here is China has a problem with Taiwan as well. So they could do the same thing. I mean, according to China, they own it. Basically, that's one of their countries, or basically part of China, if you like. Okay. And I just don't want that uncertainty. That's number one. Number two, this stock, I can't buy it on my basically ISA account. I can't buy it on Trading 212 through my ISA account. So it was in Freetrade. Freetrade isn't on an ISA account. So even if I basically grow this, is basically, I want to hold these stocks about 10-15 years. So 10-15 years from now on, if I made a lot of profit, if I was to sell it, then the tax man will take half of that money. So that's one of the reasons I actually sold this out. And then I used that money to actually buy the ETFs that I shared with you. If you haven't watched that video and about the ETFs, go and watch it. Right, so let's get started with the first stock, and that's Stanley Black & Decker. I bought 2 shares. I paid £240 basically, and that gives me about almost £4 in dividends every single year. Okay, I'm adding to this company. So this is not a new position. I've just added to 5. I think I had 5 shares or 6 shares. I've added to 2 more. Next one is Medtronics. Again, same thing situation. I already own about 10 shares. So I bought more. So I bought 2.5 shares. I spent £193. That basically, the dividend here, by the way, is minus the 15% and US tax. So I've taken that out, but it still get about 1.6, 1.7%, 2.45%, which is quite good from these companies. Okay, so I've taken that out. I didn't want to confuse people. So the dividend for Medtronics, so they pay about £1.58 pence, and basically that gives him about £4 per year, basically. Okay, so that adds up. And the good thing about dividends is, and I'm going to talk about this later as well, is the fact that, okay, so I've added about £900 worth of dividends by spending almost £4,000. But the good news is this compounds, okay? So the fact that this £100 will be paid into the account, then I'll reinvest that will generate more dividends and more, because you can buy more stocks with that. That's the beauty about the dividends. You can compound it, okay? VFC is the next one. I bought 3.7 shares. I spent £158. That gives me about £4.68 as well. Next one is Merck. I only bought 1.78 shares. I've spent about £100, over 3%, which is quite good. Their dividends are actually quite good right now. So the other day when it dipped, I bought basically £100 worth of shares, and that gives me about £3 in total. And that I think I own now about, I'll check in a bit, but I can't remember exactly how many. In fact, I'll check it right now. If we go to Merck, yeah, 26.7 shares in there. The next company that we are added to is 3M. I bought 4 shares. 3M is down so much just this month because there's stuff going on with some people are basically suing the company because some earphones that they bought and all that stuff. So at the moment it's down a little bit, and obviously because of the overall market is down at the moment. That's probably one of the reasons, and I added to 4 more shares, which is absolutely brilliant. That adds about £15 to my overall portfolio. And in dividends, Air Products and Chemicals, another great company, because of the overall markets are down, is down quite a bit. So I bought 3.6 shares, spent about £644. That adds about £18 in dividends for every single year. Next one is PPG Industrials. This one is just I've only bought 1 share. I thought it was quite overvalued, but it went down quite a bit one day. I think almost 6-7% one day. When the Ukraine basically war started, between all that stuff that's going on at the moment, when it started, basically I think it went down about 6%, 5%, whatever it was. So I bought more of that, spent about £94 in that, and I basically that gives me £1.50 in dividends. Cummins is the next one. I bought 2.6 shares. Again, it went down almost every single time the market goes down, because it's quite volatile. It's got a higher beta, because in the industrials they're quite basically they have a higher beta. So it has a higher beta. So every time the markets go down about 2%, it goes down about 2.5%. So I just added to 2.6 stocks basically. I bought 2.6 shares. Okay, and that adds about £10, which is quite nice. This is one of the companies I'm still bullish on. I'm still adding to it. Same goes for Air Products and Chemicals. Same goes for 3M and so on. Next one, I bought a small fraction of shares of Johnson & Johnson, one of the great companies that I own at the moment. I haven't added to it in this month, so just a little bit. That adds about £1.60 there. And then Home Depot. After the earnings report came out, it went down quite a bit. So I bought 1 share. I think now it's kind of fair valued. I still think for margin of safety reasons, okay, and that means I want to have a little bit of a margin of safety just in case the analyst basically make a mistake or whatever it is. I want to have that margin of safety. So I'm still waiting to buy more of this company. I'm not done with it yet For that reason, I just bought one share because it went down quite a bit, and for the month I think it was down almost to 10%, 15%. So I bought one share, and that adds about £4.84 p there. The next one is a new addition to the portfolio, and that's RB. RB is one of those companies that on my basically on my watch list for a while. I've been looking to add UK based companies because of the UK. Obviously, because I live in the UK, number one, and number two, I don't want to pay any taxes on my dividends. So just like Unilever, I actually was looking for another company to add to my portfolio that's well diversified, and RB is one of those companies, really very well diversified company, and they have a lot of cash. The company is doing well. They have so much products. They are internationally recognized. So today it actually went down quite a bit because of overall market. The FTSE 100 was down, I think, about 3% today at some point. So I bought 5 shares of that. It spent £296. That adds about £8.72p for that one. And then I bought a little bit of Unilever as well. Again, I say a little bit, it's 5 shares today because it also went down. I think it was about 35 per share at one point this morning. So I bought 5 shares of that on Unilever. That adds about £7 into my overall portfolio. Next one is the ETFs. I've shared this with you guys last time, so I've added all of them together. So I bought about 35 shares for the £1,000 that I paid. The yield for the whole thing is 1.68, and that adds about £15 into my overall portfolio. I really like the ETFs. I'm going to keep them there. I'll show you basically how they perform so far, but yeah, I'm going to keep them in there for about a year or two and see how they perform in comparison to the individual stocks. And then the next one is Salesforce. I bought 1.4 when it went down quite a bit recently. I think it's still going down, I'll be honest with you. I've spent £213 on that one. And the next one is Adobe. I just bought about 0.659% fractional shares, and I spent about £206 in there. Obviously, they don't pay any dividends, those two stocks, and for that reason, I have now spent £4,252. Now, out of the, so I spent basically made £1,200 from selling and TSM, and then I added that to this portfolio. And as you can see, just this month, I think I spent more in this month than any other month, because as you can see, probably about over £3,000. And I'll be honest with you, I will be doing the same thing in the next couple of months if things keep going down. If any of these stocks keep going down, I'm definitely adding to it because that's my strategy. I want it in the long run. I'm not just focusing on just what's happening today. I'm focusing on about 5 years, 10 years, and I'm looking around, doing my research, finding out companies that are actually great businesses that is going to be around for a long time. This current volatility, because of the interest rates, because of inflations, because of the war, all of these things will disappear sooner or later, hopefully. And if we get into bear markets, that's absolutely fine. I'm going to keep dollar cost averaging and see what happens. But generally, the volatility we see right now might not last forever. So let's see how it goes. Right, next is just the dividends that I got received this month, the month of February. So as you can see, February wasn't that great. It was £26. Again, that's £26 that I didn't have to do anything. I didn't have to get up to go to work and get that or whatever it is. Right now, so far in March, I think I've been paid today, so I haven't added that yet, but March has been about £5 so far. I'm going to keep adding here, inshallah, see how it goes overall. But I think I'm expecting more this month than obviously last couple of months. And if you look at this here, okay, March, I'm expecting $235 in this month. And then in April, it goes down, May goes down. And then the reason for this is because the companies that I own pay, a lot of them probably pay in March, June, September, and December. And for that reason, that's basically what's happening here. Okay, so some months I get paid a lot, some months it gets paid a little bit. So as you can imagine, as you can see here, £235, that's dollars. That's probably going to be the highest I've ever been paid. And when you look at where all that money is coming from, it's companies like 3M, J&J, APD, okay, the top 10, Unilever, for example, Broadcom. Broadcom actually have reported their earnings report today. It was yesterday. It was absolutely brilliant. I'm going to do a video, in fact, just to kind of update you guys. And then you got Amgen, Merck, you got Cummins, for example, Home Depot, Union Pacific, Procter & Gamble, and all the way down to RB, which I added today. I don't know if that's actually true, because RB, they have the US version and then the UK version. So I think they pay more than $2 basically per share, whatever. But they only pay twice a year, so that's probably why. So yeah, that's my dividends that I'm expecting. So hopefully this month, in March, when I actually do the next video in March, hopefully we'll see a lot more than what we have right now. But again, it is all about the compounding effect. Okay, when I started the first year, I think in 2020, it was I only received 165. This year, over £500. Hopefully this by the end of this year, okay, I will hopefully get up to maybe about 1,000. If I can get up to 1,000, that would be brilliant. But that predicted income for this year is about £836. But I'm still adding to it, so that's why. So overall portfolio here, when we look at this one here, so this is the dividend portfolio. This is only dividend stocks only here. So you can see it's up about just 3% or just about £1,000. The growth portfolio, which includes Tesla and so on, is up about 2.4%. And when you look at just the ETFs, generally just less than 1%. But I've only started about a couple of days ago, so that doesn't really count a lot. And my growth portfolio is just Tesla, CRM, CrowdStrike, tiny bit of fractional shares. I haven't added anything to it yet. And Adobe just owned for 4 shares. Right, let's have a look at the overall portfolio here. As you can see, I have, how many holdings do I have? I've got 31 holdings in here. And just the ones that I'm just going to talk about, I'll scroll up and down. If you want to pause it, you can see it. And I'll share the link anyway later, so you can see the individual stocks and whatever. But the ones that I want to focus on is the ones that are doing really bad or really good for the next couple of minutes. Okay, let's start with bad first, because the ones that are down quite a bit include 3M. 3M, because of the overall market is down, and because there's some sort of a legal situation going on, that's probably why it's down quite a bit. I'm not done buying it yet. I'm going to add maybe another 5 shares and just completely forget about it for probably about a year and see how it goes. Okay, so that's the first one. I'm still not selling it. I'm going to hold on to it. The next one is Unilever. Unilever has been in the red since as far as I can remember, but I bought 5 more shares today because it went down below £35. So I'm going to keep adding to it because it's UK based. I don't mind. I'll probably get to and maybe add another £1,000 in the next couple of months. Probably by the end of this year, will probably have about 2,500 or whatever it is. The next one I want to talk about is Air Products and Chemicals. Again, the same situation as 3M. They don't have any legal situation going on, but I think when the report came out, it was their forecast wasn't as great, as well as that you had situation where the stock market was just generally going down. So yeah, that's probably one of the reasons. Again, I want to buy a couple of more shares of this business. I really, really like the company and what they do. They don't do consumer to consumer. They basically sell it to companies, and they have reliable companies. They're around the world, so I'm really happy with that. So the good companies, the companies that are basically doing really well include Broadcom. Broadcom had their earnings reports just today. As you can see, they're up now 3.5%. Amazing company. I've got a video coming up just to analyze the whole company. But right now, as you can see, it's up 36% or over £600, which is absolutely brilliant. Okay, and the next one is Home Depot. I had 7 shares. I bought 1 more, as you saw it early. I've now owned 8 shares. I want to get to at least 15 shares of this business. I really like the business model. I like the fact that they're not going to run away. They're not going to go anywhere. They are the favorite being home retailer, whatever, home improvement retailer in the US. So yeah, I'm going to keep adding to it. As you can see, it's right now up about 12% or £200. It went down quite a bit recently. So hopefully if it keeps going down and maybe goes down another 5% or so, I might add to it again. The final company that I want to talk about is Union Pacific. I don't know what happened yesterday, but it was up a lot, and today, as you can see, is up 1.7. So this company, it really surprised me. I like the fact that they are dividend paying stock, they are reliable dividend paying, they have been around for hundreds of years, and I love them. I absolutely love this business. It was down quite a bit, and I started buying basically when it was undervalued, and as you can see right now, I've been rewarded nicely, about £500 up, or 28% up, which is quite nice. Final thing I want to actually mention is Qualcomm has been one of those companies that I haven't added to lately, but I feel like I want it to come down below 160s, and hopefully then I can add a couple of more shares. But yeah, so that is everything I want to talk about. Again, just to, if you can pause the video and basically stop and have a look at what's up, what's down. But generally, that is it in terms of giving you overview. As you can see here, the final thing I want to talk about is the 3 ETFs that we've added recently. And as you can see, this one is up, this one is up, this one is down just a little bit. It's probably because it's exposed to a lot of emerging markets. But the world one is holding really well, because I thought this would probably get a hit. But at the same time, this shows you when it comes, stocks don't go down 5-6% a day, but when it comes to the ETFs, it's probably like 0.5% or 1%. So they hold their value, which is one of the reasons why you would invest in ETFs. And then there you go, RB is here, just down almost 2% already. I think I bought it this morning when the market opened, and then from there it just keep going. I think I bought it around there, and then it kept going down. Again, I don't mind. I'm gonna buy more of this company. I'll probably add another 10 to 15 shares while it's still undervalued, so I'll keep that in my portfolio. And I like the fact that they're UK based. Tesla is still here, it's not going anywhere. I don't know if I'm gonna sell it, if I'm gonna hold on to it. It doesn't look like it's gonna come down to the price range I want it to be, and it's not going to the high end. The price I'm looking maybe about 1200. I'm probably get out of it, or if it goes down below about 500, then maybe I'll buy more of this company. I like the company, but it's just overvalued right now. Just the next thing I want to talk about is the sector breakdown. So as you can see, I've got 24%, almost 25% in technology. Again, because of my background, I'm really quite comfortable in this sector, so I've got 25% in there. Healthcare, I really like. Again, I don't know much about healthcare, but for some reason, the companies that I own seem to basically have products that I understand what they do, but not fully, okay? But I'm comfortable with the business, because like companies like J&J, come on, they're not going to go away anytime soon. So I've got 21% in healthcare, consumer defensive or consumer staples, whatever you want to call them, about almost 9%, industrials, almost 19% in there, 14% in materials, and then consumer is only 12%. Now, this is only the dividend paying stocks, okay? Growth stocks is only 2 sectors, and that's consumer discretionary, that's Tesla, and then the rest of it is technology. And then breakdown of each companies is probably be better to show you in here, okay? If I go to the ETFs, and again, I will share this with you so you can have a look at it. So my target is to have my 10% of Microsoft, Johnson & Johnson, Qualcomm, and so on. So a lot of these companies, some of them, even though KLA, I really like the business, okay? At the moment, I'll just put it down to 2%, but I might move it up and maybe break down Rio Tinto or some of the other companies. But yeah, that's my overall portfolio. I hope you enjoyed the video. Before I stop the video, I want to talk about one last thing, and that is the ISA account, okay? So basically, I'm based in the UK, so in UK we get, if you open an ISA account, which is for basically mainly for basically buying stocks, whatever, you get 20,000 allowance, and then anything if you own stocks and you get dividends, whatever, basically it's not taxed at all. It's basically tax haven, okay? So for that reason, I like to make sure I add £20,000 every single year, okay, in the next couple of years. That's the plan. So last year I maxed it, or before we got to the 6th of April. This year it probably looks it's going to happen again, but I've got 1,600 to put in still. The stocks keep going down, so I still have a little bit of money left on basically right now to invest. So if the stocks keep going down, then I'm gonna add this 1,600 but hopefully in the next couple of weeks, and then see what happens. But I don't want to run out of ISA, because I don't want to actually use the Freetrade account anymore. I still got some stocks in there. I haven't sold that out, but I just don't want to use. I want to make sure that I max my ISA account every single year. And it's really good, the fact that we're allowed to have this, okay? And basically any dividends that I get paid, any capital gains, none of that, we don't have to pay a penny towards the government, which is absolutely brilliant. So yeah, I'm getting there. I've got just £1,618 left. I'm definitely going to add that before the end of this, before the 6th of April, and see how it goes. So overall, that's my portfolio, and the way, I've been adding quite a bit of money in the last couple of weeks, but you can see here it goes up, it goes down. In fact, what I want to show you, this is interesting actually. I just want to show you, if I go to 3 months, right? About 3 months ago, I had this, basically this portfolio was up about 17%. Okay, the 10th of December, this portfolio was up 17%. I had £6,000 in profit, obviously, and gain unrealized gains, right? And then it was 18, and then it kept going up and whatever. And right now, I only have £2,000 left. So because of what's happened recently, okay, it wiped almost £4,000 out of my portfolio. Again, I'm not really worried, because I'm a long-term investor. I know it will come back down some point, okay? It will go up again. It will go up and it will go down. That's what it is. That's what the stock market does. So as long as you have a strategy, get blue chip companies that pay you some dividend while you wait for the stocks to correct. That's it. And this is the kind of thing. So this is the S&P 500, the charts, for example. So since 2000, since 99, you can see it. Basically, there might be a dip here and there. And this is the March when 2020. Okay, the stocks keep going up. Okay, and they do. That's what they do. So every year, every month, every week, they might go down, they might go up, but ultimately it's heading upwards. Okay, and that's what I would like to see. So yeah, that's generally my portfolio. I hope you enjoyed it. It's transparent. I'm trying to share my, my overall journey. If you like that kind of thing, subscribe to the channel. Let me know if you have any questions. Have a great day. Assalamu alaikum. Take care.